Director of Corporate Finance at the Alberta Securities Commission, and I'm going to be chairing our next panel on climate-related disclosure. So I'm going to invite my panelists up onto the stage here. While they're coming up, just a couple remarks. As you know, if you have any questions, please enter them in Slido. We will try to leave time at the end to take a few questions. I don't think I can overstate the significance of this initiative, the climate-related disclosure that we're looking at right now. There are tremendous pressures by various parties, institutional investors and others, to adopt disclosure, harmonized, consistent, comparable disclosure with respect to climate-related matters. But if we don't get it right, there's also tremendous risk that we create burdens and have negative implications for our capital markets. So hopefully our goal is to get it right, and I hope you'll enjoy this panel. Just to start here, I'm going to introduce the panelists. I won't give you their full bios. Each of them have very impressive backgrounds. As mentioned earlier, they're available from the tent cards on your chairs. First here next to me is John McKenzie, the CEO of the TMX Group. And of course, there's a number of entities within the TMX Group. Two that are of particular significance today for our conversation are the Toronto Stock Exchange and the TSX Venture Exchange. We're also honored to have John Mitchell, the Vice President of Sustainability from Suncor. Next is Charles-Antoine Saint-Jean. He is the inaugural chair of the Canadian Sustainability Standards Board. And then at the far end there is Jonathan Taylor. Jonathan heads up our newly created Sustainability and ESG Disclosure Department at the Alberta Securities Commission, and he's co-chairing the climate-related disclosure initiative for us. And I'm not sure if you noticed, if the audience caught it, we have John, and Saint-Jean. So,
it was a criteria.
Despite the similarity in names, I think you will find that we have some very unique perspectives here from our panel members. All right. Okay, Jonathan Taylor, we're going to start with you. I know there's many people here in the audience who have a high level of understanding in this area, but we wanted to make sure we sort of set the stage for those that might not be as familiar. So the CSA is contemplating adopting a new rule that would require disclosure of climate-related matters. We are looking to the standard to be adopted by the Canadian Sustainability Standards Board, the CSSB. The CSSB is looking at a Canadian version of the International Sustainability Standards Boards, the ISSB. So can you, maybe for those who aren't that familiar, can you provide a bit of a high-level overview of what type of disclosure is contemplated by the ISSB standards?
Sure, I'd be happy to. So good afternoon, everyone. It's a pleasure to be here on the panel. So in June of this year, the International Sustainability Standards Board published its first two sustainability standards, the IFRS S1 and the IFRS S2. So the IFRS S1 is really the foundational standard and includes overarching requirements that are necessary for any sustainability disclosures. It also requires disclosure of information about all material sustainability risks and opportunities, including those beyond climate. The IFRS S2 is the specific climate-related disclosure standard. And our focus right now is on the IFRS S2 and the provisions of the IFRS S1 necessary to support the adoption of the S2. So what's in the climate-specific disclosure standard specifically? So the S2 requires disclosure of information about climate-related risks associated with both physical risks and transition risks. So physical risks, for example, resulting from extreme weather events or shifts in climate patterns that cause sea level rise, for example, and transition risks associated with policy and technology changes to address climate change mitigation and adaptation. So the S2 also requires disclosure of climate-related opportunities. The S2 incorporates the recommendations of the TCFD, so the Task Force on Climate-Related Financial Disclosures. It also includes the SASB specific topics and metrics, so those produced by the Sustainability Accounting Standards Board as illustrative guidance. And it also sets out disclosure requirements for transition planning, climate resilience, climate-related targets, and scope 1, 2, and 3 GHG emissions. The S2 requires an issuer to use scenario analysis to assess climate resilience and to disclose the current and anticipated effects of the climate-related risks and opportunities on a company's business model, value chain, financial position, financial performance, and cash flows over the short, medium, and long term. And I guess the last thing I'll point out, included within the S2 are proportionality mechanisms and transition reliefs to assist issuers with implementation application. So for example, only material information is required to be disclosed. Also certain disclosures that are subject to high measurement uncertainty or where it's difficult to obtain the required information can be limited to what is reasonable and supportable and available without undue cost or effort. Also, in certain areas, issuers can use qualitative instead of quantitative approach if they do not have the skills, capabilities, or resources. And then finally, the standards include one-year transition reliefs for the application of specified requirements.
Okay, thanks very much, Jonathan. Okay, as a bit more background, John Mitchell, there's a number of companies that have been making voluntary climate-related disclosure for a number of years, and Suncor is one of those. So I wanted to, and also broader sustainability disclosure as well. Can you speak a little bit about what was the impetus for Suncor deciding to make that disclosure, and then as well, as we think about sort of the ISSB and the CSSB, my understanding is that Suncor supported the development of the ISSB standards, the creation of the CSSB, and you've even been part of the selection committee choosing the board of directors for the CSSB. So what sort of was the prompted this, encouraging this by Suncor?
Sure, thanks Denise, and thanks everyone for coming out and sticking around on a topic of ESG and sustainability disclosure. Oftentimes, I can't see you all very well, but I'm hoping that not a lot will be nodding off in the background as we talk about this. But when it comes, when I think about Suncor and why have we been active in this space, Suncor, we've been striving for sustainability leadership and trying to occupy that position for a number of years. Our business plans, our growth, our strategy is all designed to deliver energy in a way that can be trusted and to help us be successful through all the energy transitions that we're seeing today and that we've seen historically. When we think about disclosure, we've been doing our sustainability reports and our sustainability disclosure for over 25 years. We've been producing a standalone climate report for the last 7 years, all because of a fundamental belief that our claims have to be backed up by evidence and demonstration of performance against those claims. And by doing that, whether that's on behalf of the country or behalf of a company, putting the evidence behind claims helps to build trust, and it helps our stakeholders, shareholders, and the communities in which we operate understand what we're trying to do and how we're trying to be active in this space. And so when it came down to something like the ISSB and its role, there's been such a proliferation of data when it comes to ESG and sustainability, such a proliferation of standards and approaches and techniques that consolidation in that space was in some ways inevitable and also incredibly important so that we can get the consistency, comparability, relevance, and insight that we need from this data. And so the standards themselves can help us get there. So when we looked at that trend and said, okay, well, where's it going? The ISSB was obviously gaining the most momentum. It's the one that was the most relevant and the one that was sort of the biggest tent to pull all these together. And when we looked at it from our position within Canada and the Canadian economy, we thought that Canada had a lot to bring to this conversation. We've got a unique economy that's based amongst our peers in either the G7 or otherwise that is, heavily resource-based, heavily export-oriented, and composed of a significant amount of small, medium-sized organizations, as well as some others. And that positioned us really well to offer insights into how a country like ours or a standard like this could develop over time. And so we advocated as part of a group called the Canadian Champions to locate the ISSB head offices co-located in Montreal and Frankfurt. And then through that process and through some work with Charles-Antoine and others, began to formulate and understand what the CSSB would look like, the Canadian Sustainability Standards Boards, in an effort to interpret those international standards into the Canadian context. And so through that exercise, we wanted to make sure that the composition of the board was fully reflective of the Canadian economy so that we could realize those two goals of having that economy represented in the interpretation, but also reflected back to the ISSB and the things that we can bring to the table uniquely from Canada. And maybe lastly, why is it important for Canada? Well, fundamentally, I believe and we believe that we want to compete on sustainability performance, whether that's as a company or a country. And in order to do that, we need standards that can compare our performance against others, because we think any time that we can compete on sustainability, both either as Suncor or as Canada, we're going to come out on the top.
Okay, thanks. Okay, John McKenzie. John Mitchell just mentioned being competitive. So when we look to the south, the SEC seems to be proposing, they're not adopting the ISSB standards. It looks like they've come up with sort of their own proposed disclosure based on TSFD broadly. Given our proximity to the US, the interlisting of so many companies, cross-border financings, what's your thoughts sort of on what that means for us in Canada?
It's such an important question, so thanks for bringing it up. And for those that don't know, we've probably got over 200 of our largest companies in Canada are listed both in Canada and the US. And most of the time when a large private company is considering public markets, they're being heavily marketed by US bankers, US exchanges to come and list in the US. So we historically don't win if we have a heavier regulatory or disclosure burden or obligation in the Canadian market than what the US has. So as we look forward in terms of how we move forward on things like ISSB, S1, S2, we want to make sure that there is very limited gap between what the requirements are going to be in the Canadian market and what they're going to be on the US market, and what does it look like from a time frame standpoint. Now, that being said, very much to John's point, the largest companies in Canada are actually doing this already.
Right.
I would say probably the top 100 companies in our economy are doing voluntary reporting. We're one of them as well. We've been doing it for a couple of years. So I think for those large global companies that the investors are demanding it, it's not an issue. It's when we look to the rest of the public company base, and even on the Toronto Stock Exchange, we have kind of 800 to 900 public companies there. A lot of them are actually small and medium enterprises as well. And so we want to make sure that whatever the standard is, both in terms of the standards itself, the time frame to adopt, there should be some consistency with the US market so that there isn't a reason to list in the US only to raise capital because the cost of doing so in Canada are higher. That's always what we want to watch over, kind of unintended consequences.
Right.
Because at the same time, if we actually lose the companies, we haven't achieved the disclosure objective either. So it is a tricky balancing act. I do think for the large companies, we're going to get there regardless. But we want to be careful in terms of those medium-sized companies that our adoption is relatively in line.
Okay. All right. Thank you very much. Charles-Antoine, maybe you could help us, sort of understand the broader context, what's happening elsewhere, including in Europe, and then if you have any thoughts on sort of John's comments on sort of the comparability with the US.
So thank you for the question. Thank you very much, Steve, for inviting me to join this panel. So what's happening in the U.S. is, the SEC has some proposal in the making at the moment. When they will be coming out with it, I would say it's anybody's guess. To be frank on this, and even say when they will be coming out with it. Given the turbulent legal or the politicized environment to see how long to say will that rule to say will last before it's going to get challenged is a bit difficult to predict. What's more important in the States to say is in most of the large companies, they say they are self-adopting the standards. So this is what the movement to see that is influencing, let's say, more to see what's happening in the States. And the way the ISSB standards are designed, they call it there's no regret. So you adopt our standard to see they will fit whatever say the SEC model say will come eventually. And also they're built in such a way as to enable the interoperability with the European market, to say with the CSRD, which is a much bigger ask to see of companies to say to disclose, but the ISSB gives you to see the first building block. So if you go with the ISSB, you will be to say essentially meeting say a good chunk also of the European disclosure, but they also have to say some others. To come to the Europe, as you know, they came with their requirement this summer that say up to 50,000 company now will have to start reporting to say on not only the climate to say but the full, call it the full enchilada. So the ESG is, I think they've got 11 different dimensions in which companies say will need to report. It's going to be progressive in the coming years, in terms of what they need to report, and also the auditability will also evolve over time. They're starting to say with limited assurance on those data points to say these report, but eventually going to say to full the reasonable assurance to say to their report. So that brings the other question in terms when talking about to say the ISSB, will they be subject to assurability, and would the CSSB standard be subject to assurability? It's too early to say that at this time, but you should also know to say that there's a consultation paper at the moment, an exposure draft on the what they call the ISA 5000. This is the audit and assurance standard on sustainability. That will be coming. That will be the consultation period and this calendar year. So you can expect in about a year from now a standard on audit the assurability to say of sustainability standard. So this is a very dynamic environment to say the least.
Okay, thank you. Talking about sort of the standards, maybe we can stick with you for a minute. You could just help the audience understand a bit about what's the process. So how does the CSSB go about Canadianizing the ISSB standard? Is there a public consultation process for that? Sort of what's involved with that?
Good. So the CSSB was very much created, let's say, by the Oversight Council, let's say, to bring, let's say, the ISSB standard in Canada. We've got international standard. The objective is to bring them to Canada. So it's going to be comparable. The Canadian investee, to say the issuers, to say will be comparable with all the global investment world. So to bring it, to say, to Canada, the CSSB is, we just had our first meeting in September in Montreal to decide in terms of the way forward, to say to look at doing it. In November, the board will be reviewing the project to say how to do it. If everything goes well, the board would approve at that time. And it's a bit, the board has not deliberated on this yet, but to bring it in Canada, we feel we need to consult. But it's important that we do consult, but we also do it in collaboration, or to synchronize with the CSA and also the other prudential regulator, the OSFI of this world, so that there's consultation fatigue with all the issues. So we got to be careful when you go to the market to ask for a point of view, and they're all consulted the last 2 years on S1 and S2. So it's, at some point, people will finish consulting and decide. So we're trying to see to all consolidate, to see, not consolidate, to see if we synchronize, to see so that when we go to the market, we ask the question that also could be very relevant for the CSA and OSFI eventually. And so I would say in the 2024, we should be able to come up to a decision in terms of what would be the framework to go forward in Canada. But we'll wait until the board deliberate and make their decision. But I would not be surprised if there was one consultation in the first half of next year, so to take the pulse of the Canadian stakeholders.
Okay, thank you. And do you expect that the CSSB standards to diverge much from the ISSB standards as a result of that?
Well, got to be careful, let's say, to diverge. We wanted to have an international standard so that it is recognized, so that when the Canadian issuer go to the market, the international investors recognize the Canadian stories, is they don't need to reinvent, okay, oh, this is the Canadian, they're saying this way, the Germans say this way, the American, so we want to have a global story. So we've got to be careful not to diverge too much, but is it possible that we could have maybe transitional amendment to say they're talking about to say the ISSB is effective Jan 1st, 24 for all companies, the city that want to adopt it. The city, could it be maybe delayed a bit to see if, depending on the size? Could there be some portion of it could be delayed by a year or 2 years? So there might be some modification in terms of the implementation, but there might be maybe the market will tell us, you guys say you might need to increase the disclosure, and I can think of maybe all the question we heard this morning about the reconciliation, and so maybe for the Canadian market we might need, but that would be for something to do in the coming years. So and that would be on top of the ISSB, because it's designed as a global baseline, and they recognize that various countries in Europe, they've got a humongous additional baseline to the baseline. In Canada, we might want 1 or 2 more, depending to fit the needs of Canada.
Okay.
So this is, but global baseline. We want the Canadian story to be recognized by international investors. So we've got to be conscious of that.
Okay, thank you. I want to get back to you on sort of what that means for the smaller issues, but first, just maybe Jonathan Taylor, can you speak a little bit about, Charles-Antoine has talked about sort of the CSSB process. How does the CSSB standard end up being part of securities law?
Yeah, sure. Yeah, so a key dependency to the CSA process is kind of the completion of the CSSB process. So right now, the CSA and the CSSB are working in parallel. So the CSA has already initiated work in the development of a climate-related disclosure rule, while the CSSB is also working to adopt the standards into Canada. And the CSA and the CSSB have formed a working group to collaborate where possible, as we work through these respective processes. So, however, the CSA will need to see where the CSSB lands before we can finalize development of our own rule. So Charles-Antoine has indicated, that the CSSB will, consult in 2024. They'll need to go through their process and evaluate the feedback and finalize the Canadian version of the climate standards. And after the CSSB finalizes the standards, the CSA process will include, publishing for at least a 90-day comment period, and to be able to get feedback from the market, and anyone will have the opportunity to provide the CSA written feedback before we finalize our rule. Then the comments received will be considered, and where appropriate, any adjustments made to be responsive to stakeholder feedback. If changes are material, the proposed CSA rule will need to be republished for comment. And assuming all necessary approvals are obtained, the final CSA rule will be effective at the date specified in the published rule, which, at this point is to be determined.
Thanks. All right, come back to you. So you were talking about sort of the different types of different sizes of issuers and readiness and capacity. We do have in Canada a significant number of small, very small, nano-cap public companies trading on well-regulated, that's a pat on our back, stock exchanges. So it's sort of a unique market, I guess. Can you speak a bit, John, to what you think is the readiness or the capacity of those issuers, and also what you're hearing from the investors in that space about their interest in this sort of climate-related disclosure?
Yeah, I'm happy to. And even before I do, let's take a second and celebrate what you said at the beginning, that Canada's got the most successful micro and junior public capital ecosystem in the world with no comparative. And thankfully to a lot of the people that are in the room today that have actually helped create and foster it, the venture exchange, the CSC that operates as well, are unique in the world. No other country through all of our research has had this much success in actually financing small cap companies in the public domain with a combination of venture capital on exchange and retail investors to interact with it. And it's unique in the world, and it's actually one of the things that we're trying to do a much better job telling the story on so that people understand it. If you looked at these companies anywhere else in the world, they're not public companies. In the United States, they're private, they're OTC. In Europe, they're private companies. And so when we need to think about both kind of readiness and demand, they also go in that lens as well. So in terms of readiness for the majority of these companies, I wouldn't be exaggerating to say zero. These companies are generally, you're talking $1 million in revenue. They could be 10 to 50 employees. Market capitalizations in the tens or single millions. They would not have either capacity, capability, or resources to take on a standard like this. And nor were the standards intended to be. I give a lot of credit to Charles-Antoine and the team, both at CSSB, the ISSB directors, because I know you're talking about the consultation coming, but there's been substantial consultation through this process along the way. And as a marketplace, as a representative of issuers, we've had the opportunity to engage with both the CSSB and the ISSB directors, and I've gotten a lot of comfort from what I've heard from the ISSB directors that these are standards that are designed for large global public companies. They weren't designed for small private companies, and so we need to be thinking about the right adoption piece. So we've talked about the what in the standards. Now the question is kind of the how and the when. And what we would advocate and what we would recommend is that these are likely not fit for purpose for small junior companies. And that in the initial rollout of the standards in Canada, we would look to exempt these marketplaces. And I've been asked before, does that make sense? Would we do that in any other case? And it's actually the way we've built the market. Like the whole underlying premise of how we've created a successful junior and senior ecosystem is with proportionate regulation. And if you look to history on other new global changes, when we had Sarbanes-Oxley in the US and how we were going to apply that in the Canadian context through CEO, CFO certification, we applied a standard at the senior exchange on the TSX that's very consistent and similar to the US standard. And on the junior markets, we did something that was more fit for purpose for those marketplaces. So in the initial adoption of this, I think we've got to be really cognizant of that as the standards as designed, not fit for purpose for the small cap markets. And then to Charles-Antoine's point earlier, even in the senior market where we have companies of smaller size, they're going to have different readiness as well, and having the right transition time frame is going to be important. And it might not be transition time frame for all components of the standard, but maybe for the pieces that are more complex, like the S3s, like the scenario plannings. There's different ways that we can roll it out so we can have companies be ready. The last piece I'll answer in terms of your question is the demand side from the investors. So the investors that are investing in junior companies are not the investors that are investing in the large cap or the global companies. They're not the big pension funds or the big money managers. They tend to be private, venture-backed, wealth management funds, retail investors. That is not a group that we're seeing the demand for this data yet. We are certainly seeing it in the large asset manager community. We're seeing it for ourselves as a public company as well, but it's not in this group. And so as we get through to the execution of this, we want to be thoughtful on, well, it's really the same principle in all standard design, and both Charles-Antoine and I have been involved in standard setting for a number of years, is there's a cost-benefit question on anything, and ensuring that the benefit of what we're creating for the users is worth it for the cost on the communities that are involved.
Okay. Thank you. That's very insightful. Okay. John Mitchell, just switching gears to the other end of the spectrum. So let's talk about some of the largest issuers in our capital market, which includes Suncor. And that group is, we know that from our own reviews, that group is providing climate-related disclosure. They have been doing that for a while. Can you speak a bit about the resources that were needed to provide the disclosure Suncor is already providing, and then what's sort of net new in the ISSB S2 standard that companies are going to be facing, those larger companies are going to be facing?
Sure, happy to, and I think it's, we're privileged in that we do have a very sort of dedicated team of experts in this space that we've cultivated and grown over time. It is a small and mighty team at the moment, but it is a group of staff that are dedicated 365 to disclosure in this space. It's very small, 2-3 people, but when you compare that to that size to do the disclosure in this space, to the size of the teams and the amount of work that goes into disclosure in the financial community, neither end of that spectrum are probably going to be where we end up, which is a good thing because we can't afford to grow the amount of resources we're dedicating to this in a way that is uncommensurate with the value that it provides, to John's point. And so, but maybe it's helpful, I'll step back for just a sec, because when I say there's a group of people that are dedicated 365, 24, sometimes parts of that year is 24/7 as well, to putting this disclosure together, it's helpful to understand, what do I mean when I talk about the body of disclosure that we produce in the sustainability sphere? Because, it's easy to just say, well, here's a report. That's your disclosure in this space. That's not reality. When we talk about the body of disclosure, we're talking about the sustainability content in our annual report, our management discussion and analysis, our annual information form, our proxy material, our report on sustainability, our climate report, our filings with the Carbon Disclosure Project, and a number of other vehicles that we use to disclose very fully and comprehensively in this space. Insofar as we actually produce an index that is a roadmap to where you can find all of the different content in the sustainability spheres linked to all of the different standards like TCFD. We were the first North American company to support the TCFD in 2018, as well as some of these other standards. So there's an index that says if you're looking for this content, you can find it here, 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 and here. This content, you can find it in these locations, and that allows us to be very comprehensive in what we report and making sure that we're satisfying the audiences for those different products, because it is not possible to satisfy every audience with a single piece of information. So we do talk about this in terms of the body of what we provide and how we disclose across the full spectrum. And I keep that index with me all the time because I know exactly where we've got different pieces of information. But I think in addition to that, there's two things that sort of come out of that. One is it's an argument and supportive of the need to get some clarity in the disclosure space here and get those standards to say, well, actually, this is where you should disclose that information. This is the guidance that we should provide. And so the standardization will help with that. So again, why we've been a bit of an advocate in that space. Secondly, when we're talking about how we disclose and what we disclose, there is different information for different audiences with different levels of detail in terms of the quality of the data, as well as the assurance we provide on that data. So when we talk about what we might assure, today we assure a number of different indicators within our sustainability and climate reports to a limited level. We're seeing that evolve over time, likely towards a more reasonable level of assurance with additional oversight and different disclosure committees within the company. So the resourcing that is going to be necessary to move to a higher level of assurance in some of those indicators is not insignificant. I look at the trend even this year, and my assurance costs went up fourfold this year just to do what we've been doing, partially because the market is very hot, people are trying to get into it, the rates for this type of service are not what they used to be, so there is not an insubstantive cost associated with leading and disclosing in this space, and we need to make sure that we're getting the value. Again, going back to what I said earlier, which is about having comparable, consistent, reliable, and insightful data that fundamentally is business decision useful.
Okay, thanks.
And I guess actually that was all of the resourcing piece. You asked about where we are with the standards and what does that mean with respect to the content of that. So without going into a lot of detail, when I look at that body of disclosure that we provide and I look at the standard, the S2 standard, we'll use that as an example, our content is directionally consistent with all of the content that's in those because we've been following these standards over years and have been watching the evolution, helping to shape it, and helping to support it. So the content writ large is there. The detail will be interesting to see how that evolves and how we get some specificity so that we can get to those objectives of comparability and consistency. I can use, there's lots of examples that we could give on how this will help, but maybe we'll get into that in just a minute.
Okay, right. Okay. We're going to maybe switch gears here and talk about a bit more, dig into some of the areas that are maybe more challenging with the standards and get sort of feedback on those and what maybe we can do to assist. Maybe Jonathan Taylor, we've been doing consulting, the Alberta Securities Commission, we've been consulting on climate-related disclosure before we published 51-107 for comment, after we published 51-107 for comment, as we've been working now looking at sort of the ISSB standards. What can you maybe sort of outline what we've been hearing and sort of the issues that you're hearing being raised?
Yeah, sure. So I'll talk about kind of both on the benefits and then on kind of the pain point side. And John Mitchell really spoke to the benefits that I guess we're hearing from the issuer side. That the common standard could reduce the need to navigate and report multiple disclosure frameworks. The obvious benefit from an investor perspective are that it will result in more consistent, comparable, and comprehensive disclosure. I think one important thing to note is even the ISSB has come out and identified that really the standard, the ISSB standards are to address investor needs. So I think what's been reflected within the standards themselves is evidence of what the investors are asking for. When we went out for comment on our proposed NI 51-107 climate-related disclosure rule, a significant number of commenters, especially non-issuers, believed that our proposed rule didn't go far enough and believed more kind of rigorous mandatory requirements were required, especially for GHG emission disclosure for Scope 1 and 2. We also heard feedback that instead of creating our own standalone rule, we should align with the ISSB standards and ensure we preserve access to the MJDS disclosure system with the US. So our most recent consultations have been focused on gathering preliminary feedback on the final ISSB standards. And the key pain points we hear from issuers relate to complying with Scope 3 requirements, aligning the timing of climate-related reporting with the related financial statements, complying with scenario analysis requirements, particularly the quantitative scenario analysis, and determining quantitative financial effects. And the concerns that we're hearing are significant, like not minor, but significant concerns, and they're being raised even by some of the largest issuers in the Alberta market. So it's not clear whether the proportionality mechanisms baked into the standards would satisfactorily address the concerns that we're hearing. The ISSB is still in the process of developing further guidance, so we'll need to assess the guidance they provide. to see if it's sufficient or if modification is required. But I think what is clear to us at a minimum is that issuers will need transitional relief beyond what the ISSB is contemplating. For example, relating to Scope 3, timing of reporting, and climate first reporting. We have heard from issuers that they're not necessarily being asked by their investors at this time for all the information required by the S2, but that may change in the future. Another item is the need for a safe harbor to address liability concerns has also been a consistent theme we've heard from a wide range of commenters. And another reoccurring theme, and really getting to what John McKenzie was talking about, has been related to our venture market, given that around 3/4 of Canadian companies are listed on a venture exchange. So we've heard that more accommodations are needed for these companies. And some feedback suggested that they be completely exempt from some or all of the requirements, as John had mentioned. So I think in summary, we're in favor of adopting a disclosure standard that is based on the ISSB standards, but one that has modifications considered necessary and appropriate in the Canadian context.
Thanks, Jonathan. Charles-Antoine, I'll ask you basically the same question. What are you hearing? As mentioned, you've been consulting all along, even I think before the CSSB was formally in existence. So what are you hearing about sort of from investors? What are you hearing from issuers, like the benefits, the challenges?
Well, so a message well received is in terms of what the expectation is. But that's part of the consultation. We've heard the same pain point to see that has been reported from the investors. The investors want more information. The sooner they can get it, the better it is. So that's what we hear. Please come up with your standard. That will enable us to make informed decision. We'll be making comparable information also, but also will make the Canadian market attractive for investment. For the issuers, the points have been made. It's all related to the question of you're talking about capacity building. These are new standards. The ISSB standard we started the journey. Nobody expect perfection on day one. You're talking about the safe harbor. That is one of the tools that will be needed to reduce anxiety level of people to get on with starting to learn how to disclose. New technology will also come up to help us better measure some of these impacts. So, in terms of what the market is telling us is to give us time to build capacity, help us to build capacity, and we will get there. But for the ISSB will be coming up with their guide in terms of adoption, countrywide guide and I expect to see it before or sometime in December. They will also providing us some of maybe some roadmap for some countries how to adapt it. And nobody expects it's going to be perfect on day one, but everybody needs to get on the journey to educate yourself what's needed. And it's and the point I also would like to make is that regulators will be they're the one will be putting the requirement but some of the small business that you're talking about, many of the small and medium-sized business, they're going to get involved, like it or not, by the supply chain, by their client. So because all these data points is the supply chain upward and downward. So some of the small and medium-sized business, they will start being asked questions by their own clients. Okay, I need these data. I need these. So it will be coming up bit by bit and progressively more over the coming months and the coming years. So the question is, get on with it, and also manage expectation that perfection will not be there on day one.
Okay, thanks. All right. We've talked about sort of Suncor being an early adopter, but John McKenzie, TMX has also been making climate-related disclosure, so interested in your perspective as not just the head of TMX Group, but as the head of a reporting issuer, a large public company, not in the energy space, and sort of what you're seeing with respect to the standards and your sort of what you needed to do to get ready, and how you're meeting those challenges.
Yeah, and it's given that there hasn't actually been a set of standards that are either standardized or required. Our experience, while more recent, is very similar to Suncor's, which is really driven by the investor demand. And the investor demand, I was interested in a comment about investors want more information, they want it faster. I don't think anyone here who's worked in IR has never met an investor who wanted more information and wanted it faster. That's the nature of the relationship. The challenge is, what's the information that's actually material for decision making?
Right.
So we've also gone down the path. We are now a multi-year SASB reporter. We've done our first TCFD report. I'm happy to say, if you want to take pride in a Canadian institution, that we've got the lowest carbon footprint of any major exchange group in the world. So I'll throw that in. You could take that home. But to the point that John's making, it is an execution challenge. So we have had to add additional resources. There's outside costs because some of the data points are not readily available. There's extra work to do it. And then the look forward in terms of, as we translate what we do now, and both within TCFD and into, the S2 reporting, we're absolutely going to do it, because we very much agree with your point around Suncor, is in terms of being a world leader and being a company that people want to invest in, this is disclosure that we need to do. The area that are the challenges are exactly as you talk to them. Scope 3 is very difficult to execute. It's requiring data that on the supply chain isn't necessarily there, and maybe it will be over time, so there's going to have to be some good until we get to great. Scenario planning is very difficult to execute. And I'm glad you talked about the safe harbor ask in some of those discussions, because not just as a reporting issuer ourselves, but as an exchange in a marketplace, reporting issuers, we are always very careful about forward-looking information.
Right.
The regime around putting out forward-looking information, the disclosure around that, the liability it entails, the reconciliation when actuals are different from that. There's a reason why companies don't do a lot of guidance.
Right.
What we're doing in the standards, we're actually asking and requiring all companies to do regular forward-looking information. So there is a liability regime that needs to be resolved. And this is one of the areas when we talked earlier about how do we integrate and potentially differentiate from the US. It is certainly an area where we do not want to have a gap between what happens in the Canadian market and what happens in the US market that is much more litigious around shareholder action than it is the Canadian market. So that's the kind of experience that we're thinking about. We're ready. It is a heavy workload lift, but we are meeting the needs of the investors that want to understand it from us, and we do see the benefit in terms of how we benchmark against our global peer group. But I don't want to underestimate for folks the amount of lift, particularly on those more complex pieces that are the same pieces you're getting feedback on.
Okay. And John Mitchell, are you finding the same areas that are the most challenging, or what's your perception?
Sure, and I think as I alluded to before, we're well positioned across the S1 and S2, but when I look at the areas where I think it's going to be challenging to implement, they've all been touched on here: materiality, scope, scenarios, and timing. And maybe let me just dive in a little deeper on a couple of those, because I think they're important to understand. So what do we mean? So why is everybody fussed about scope 3? What's the nature of the issue? Well, there's, I hear this all the time, and I tend to chuckle a little bit when people bring it up, but scope 3 is double counting. Of course it is. That's what it's designed to do. And so once you get across that Rubicon and say, oh yeah, of course, that's by definition it's double counting. Okay, so why is it important? And that I think is where we've got a real opportunity in the standards to help make sure that when we're moving towards consistency, comparability, relevance, and insight, that it is decision useful. It has to be this material information. So why would I care as a large entity about my Scope 3 emissions? Well, there's really 3 reasons. The first is my supply chain carbon intensive and therefore subject to inflationary pressure and therefore increased operating costs? I need to know that to run my business. I need to know whether my inputs are going to get more costly as we drive towards increased climate regulation or increased carbon cost on emissions. So, issue number 1, I need to know what my supply chain is, how resilient it is, and whether or not I've got increasing costs there relative to carbon regulation. Secondly, as a business that sells a product that creates emissions, what's going to happen to that market as we take more action on climate? I need to understand that. That's fundamental business. What's my market? What am I selling? And what are the impacts and pressures on that market? That is, I have to know what's going to happen there, because the worst thing that could happen is for my customer's only solution to not be my customer to solve their problem. So I want to understand that market. I need to understand where it's going, how it's being shaped, and what the issues are associated with that. So understanding the emissions there is important. And the third is, as a large corporate entity and a responsible actor trying to improve sustainability performance, what can I do across my value chain to accelerate progress in this space faster than we might otherwise realize? So those are the 3, when I step back and look at Scope 3, those are the 3 reasons why I want to understand that in more depth. If that's the case, then let's make sure that the data we're gathering is focused on material sources of those emissions, on good, robust data so that I understand. So we can contain the conversation when we make sure we're focused on what is the business useful information that I'm trying to glean from this. So that's kind of a bit of a thought on the scope. But maybe I'll jump to timing, because I think the timing one is another interesting one, because there's 2 dimensions to the timing challenge that we've got. The first is the scale and timeframes that climate operates on and our ambitions operate on are very different than corporate planning timelines. And reconciling the timelines across which we're trying to act on climate with which we're trying to plan business is going to be challenging for a number of entities. We're lucky in the oil sands business, and in our business, we do plan over long time horizons, so we're a little bit advantaged in that space, but not all companies do. So that's going to be a challenge, is to deal with this scale problem and on timelines. But the second and maybe more tactical part of a timing consideration is most of the information that we're using, we're trying to integrate into financial reports that have a very specific time frame on when we release those through the course of the year. And the data that we're using on sustainability is derived data typically. So we need to derive it from other sources that we collect, that we report in our financials. So there has the potential to be a sequencing problem on integrating these things together. And we don't want to compromise the timeliness of financial data as we try to learn and get better at reporting some of this information, the sustainability information, on the same time frames. So that's going to be a challenge that we're going to have to tackle as well.
I'd like a second just to reiterate that point from a broad capital market standpoint, because there is some drive to do the environmental reporting in line with the annual financial reporting. And I can understand that ask from an investor standpoint. If the way that companies end up getting there, because of the duplicate effort, the actual need for underlying data, and simply the amount of work that happens at the same time, they get there by actually delaying financial reporting, that is an unintended consequence we don't want. And so we want to be thoughtful of that. We're not going to drive to an unintended impact where companies actually take longer to report because they're reporting more things that have criticality in their timing chain. So just to pick up on what you said, it's an issue for every public issuer. And the last thing that I would want to see when we've been encouraging companies to report faster is to now have companies that are going out 1 week later, 2 weeks later, 4 weeks later, and to the end of the reporting cycles. That's not helpful to have less timely financial information out to investors.
Okay, thank you. All right, we've got about 5 minutes left, so I think I'm going to try and slip in some audience questions here. And there's one here that I think is maybe John Mitchell, you could answer the first part, and Charles-Antoine the second. And so it was just going back to sort of the CSSB One is, how are the members appointed? So maybe John Mitchell, you want to take that one? And then Charles-Antoine, to whom are they accountable and how are they measured?
I'm sorry, I didn't hear.
Oh, to whom are the board of directors of the CSSB, to who are they accountable, and how are they, what's the performance metric against which they're measured? So, but did you want to start with, or maybe either one of you on, how are the members actually appointed? You kind of spoke to that a bit, I think, in your earlier remarks about trying to, have it represent the whole country, but do you want to supplement?
Sure. Happy to jump in, but Charles-Antoine is the real expert. In terms of my limited understanding, and I have 4 other colleagues up here who are much more knowledgeable about the structure of how we translate international financial reporting standards into Canadian standards, and there's an architecture around that I'm becoming increasingly familiar with as we get involved in this process. In order to set the oversight body, or in order to set the boards, there is an oversight committee that is formed on a number of the different standards. And so the oversight committee is populated with a number of individuals from different parts of the economy and different sectors that are responsible for the hiring of the board and the chair. And so that's a seat that I've shared with a number of different colleagues, and then we've gone through an interview process and a structure. Basically, you think about your skills matrix of any board. We have a very robust skills matrix in terms of what we were trying to satisfy with respect to the composition of the board, and we went through the process of soliciting candidates and applications, and then a robust interview process to select what I believe is an incredibly strong board. But Charles-Antoine, you're the expert, you live it.
Yeah, let's say the board has been assembled. We had our first meeting, as mentioned, earlier in Montreal, in September. The next one, will be in Vancouver. And this is where all the board is learning how to work together to set up what will be the next part of the journey of the board. In terms of the work plan that we're going to be adopting, we need to come up with the strategic plan in the coming months to see what will be the next thematic that we're going to be dealing with. The ISSB has consulted consulting in terms of what are the priorities they're looking at. Biodiversity is one that is coming up. Human capital, human rights is another one. So we will hear shortly what will be the priorities that the ISSB will want to focus on, and we will be tailoring our work in accordance with what we hear from the ISSB, but also from the consultation that we're going to go through with our own members. So the work has started. We will be delivering those standards so that our friends from the CSA and the OSFI can do their own work, so that we can equip Canada with the standard that will enable the conduct of business in a organized fashion as soon as possible.
Okay. Thanks, and you sort of answered one of the other questions that was here, and it was asking, why are we focused on climate-related disclosure, sustainability so much broader? So right now the focus is for us at the CSA, a climate disclosure rule, but the standards, there's much more that you're looking at that are yet to come, potentially.
Yeah, there's many more to come.
Okay. All right, how are we? We've got 45 seconds, so I'm not sure whether there's enough time here for any last-minute comments. There's a couple questions here that really go to resources. What assistance is there for companies looking at getting ready for this? I know you guys are looking at some of the things that...
Yeah, this is something that, for public companies within our network today, we also already do something called ESG 101. We do mentoring and training for public companies. We've launched a disclosure portal that helps, very much as John talked about, when companies have to report against multiple different standards, we try to normalize it so they can report once, use many times. So the marketplace and others are taking on some of the effort to ensure that we can actually train and get companies ready to do it. And so I'd always guide folks to come to us, look at the resources we've got look at our ESG 101 portal. It's actually one of the better ones in the world to help with small companies.
Well, thank you. All right, I guess our time is up. Thank you all very much for your contribution. I hope that the audience found it insightful, lots of different perspectives. So I appreciate all of you joining us today. Thanks.
Thank you.
Thank you.